Good morning, Garage Gang. It's Monday, January 19th, Martin Luther King Day. Wall Street is closed. Banks are slow. Settlement rails are quiet. But the market did not go to sleep. Bitcoin is trading around 92,000. Ethereum is sitting near 3,200. Solana is holding around 133. And that matters today because when the stock market is closed, crypto becomes the lead indicator. This is one of those sessions where price action isn't noise, it's information. The world didn't pause for a holiday. Trade policy didn't pause. Geopolitical tension didn't pause. So while equities are frozen, risk is still being priced somewhere else. That's why today feels twitchy. Tariff trade tension is still on the table. And yesterday, Europe made it clear they are ready to respond if US tariffs expand. That's not a headline you ignore. Tariffs don't just affect trade. They hit inflation expectations, they squeeze corporate margins, they complicate rate cut timing, which means when stocks reopen tomorrow, the market has decisions to make fast. Ignore the risk, hedge the risk, or rotate capital, and crypto is where that debate is happening first. Now here's the part most people are missing. While stocks are closed, the new market structure is showing itself. Over the weekend, news broke that the New York Stock Exchange is planning a move toward 24/7 trading of US equities and ETFs. That's not a tech upgrade, that's an admission. The old system goes dark, the new system doesn't. Days like today expose that weakness. And while retail is watching candles, quiet power moves are still happening. Ethiopia's prime minister publicly said the country is looking for a partner to mine Bitcoin. That's not speculation, that's energy policy, that's infrastructure strategy. Nations don't mine Bitcoin because it's volatile. They mine it because it turns excess power into leverage. At the same time, US public money is already involved. Louisiana's State Employees Retirement Fund disclosed a $3.2 million position in strategy, giving indirect Bitcoin exposure to pension capital. That's retirement money, that's long-term money, that's not chasing momentum. And yet, in the short term, Bitcoin, Ethereum, and Solana still trade like risk assets when macro fear spikes. That contradiction is the entire setup. Last week, institutional demand was strong. This weekend, headlines flipped sentiment. Leverage got flushed. That doesn't mean the story broke. It means the market cleaned itself. Today is not a day to force trades. It's a day to watch how price behaves when it shouldn't have to. If Bitcoin holds around 92,000 while stocks are closed, that's strength. If Ethereum stabilizes near 3,200, that's absorption. And if Solana stops bleeding around 133, that's risk appetite trying to rebuild. Tomorrow, when the stock market turns back on, everything priced today becomes the reference point. The lights are low, the pressure is building, and the market is deciding who actually understands what's changing and who's still trading the old system. Engines hot, safety off, let it rip.